Have you ever really wondered what's going on inside a day trader's head during those first few chaotic hours of the morning? Well, today we're going to pull back the curtain on a professional's live stream. We're going to look at the strategy, the weird jargon, and honestly, the surprising reality of what this job is actually like. All right, let's get into it. And this quote right here from the trader himself, Mr. Raffet, man, it just perfectly captures the whole challenge, doesn't it? Every single morning starts with this absolute fire hose of information, numbers flashing everywhere, just noise. The real job isn't about clicking buttons. It's about finding the signal inside all of that chaos.
And that is exactly what we are going to do today. We're stepping onto this digital trading floor to decode all that chaos so you can see the actual strategy that separates the pros from everybody else.
Okay, so before a single dollar is ever on the line, the day starts with this really crucial intelligence gathering phase. You got to think of it like a pilot doing their pre-flight check. This isn't about gambling. It's all about calculated preparation.
And the routine is super methodical. At 9 a.m. sharp, it's all about tech checks. Is everything running? By 9:05, he's already spotted the day's big economic news. And then by 9:10, probably the most important step, his special algorithmic areas get loaded onto the charts. This becomes his map for the rest of the day. So for this Friday, the game plan is crystal clear. He's laser focused on just a few markets, and he's completely ignoring others like crypto and Forex. He knows that 10 a.m. consumer sentiment report is the potential danger zone for the day. But look at that core strategy. It's not about chasing prices around. It's about sitting back, being patient, and letting the market come to his pre-planned spots.
All right, to really get what happens next, we kind of have to learn the lingo. You know, trading has its own complex jargon, and Mr. Raffet uses a few key terms that are absolutely essential to how he makes decisions. So, early in the stream, he's talking about this major headache that traders deal with this time of year. It's something called contract rollover. So, what in the world is that? Basically, in the futures market, contracts have an expiration date. Rollover is just that moment when everybody has to dump the old expiring contract and switch to the new one. And as our trader points out, this can create these huge, messy price gaps. I mean, in this case, there was a staggering 236-point difference between the September and December NASDAQ contracts. Talk about confusing. And it doesn't stop there. He then warns his viewers about another problem that comes with this rollover, something called slippage. This is one of those hidden costs that can totally wreck a good trade before it even gets going. You know, the idea is pretty simple, but the impact is just devastating. Slippage is just the difference between the price you click and the price you actually get. And on these new contracts, the trader is warning it can be 5 to 10 ticks, which is more than enough to turn a winning idea into a loser instantly. And this right here brings us to the most critical piece of his entire strategy. He's not just staring at the whole chart. He is focused almost exclusively on his predefined trading areas. Now, the crucial thing to get is that these areas are not just random lines he draws. They're specific price zones calculated by a computer algorithm before the market even opens. His entire strategy, his whole day, revolves around waiting for the price to come into one of these zones. That's how he turns total chaos into a clear, actionable map. Okay, so we've got this strategy, but where's the money coming from? Well, for a lot of modern retail traders, it comes from this fascinating and super high-pressure world of what are called funded accounts. This is a trader's lifeline. See, for a fee, these firms will let you trade their money, but the rules are absolutely brutal. On this $25,000 account, if just one trade goes more than $450 in the red, even for a split second, you're out. The pressure is just immense. And of course, there's this whole ecosystem of these firms. Our trader talks about a few of them. He sees Apex as pretty good for learning, but yeah, the rules are tough. He actually recommends a firm called Take Profit because they have faster payouts. And then he's testing this brand new company that sounds almost too good to be true, with no evaluation period at all. And this just brilliantly shows the healthy skepticism you need in this space. While he's talking about that new promising firm, the trader asks the million-dollar question. It's this constant process of evaluation, because in this game, the platform you pick is just as critical as the trades you take. All right, let's get to the live market and see how this all plays out. The prep is done, the market is officially open, and now the trader shifts from being a planner to a hunter. He's stalking his price levels, just waiting for that perfect moment to strike. At 10 a.m., the big news event finally drops. The University of Michigan Consumer Sentiment Report comes out, and the numbers are negative. It is officially bad news for the economy.
So logically, you'd expect the market to tank on bad news, right? Well, that is not what happens. Instead, after this little moment of craziness, the price actually starts to climb.
And the trader's reaction just says it all. There's no complex, drawn-out analysis, just this simple, candid observation that perfectly captures the baffling, counterintuitive nature of the markets. This is the chaos he has to make sense of every single day. So the market's moving, but it's not really behaving logically. And more importantly, it hasn't reached any of his key predefined levels yet. And this brings us to the single most important lesson of the entire morning. Just look at this timeline. The market opens at 9:30, the news hits at 10. By 11 o'clock, an hour later, the price still hasn't touched his target area. So when the stream finally ends, at almost noon, after 2 hours of intense focus, how many trades has he taken? 0, not a single one.
And when a viewer in the chat asks to see his profits for the day, his response is basically the main point of this whole explainer. The real discipline isn't in clicking the button, it's in not clicking it. He's a sniper, not a machine gunner. And if the market doesn't come to his spot, he doesn't fire, period.
Which really leaves us with this final thought. We tend to think of trading as a battle against the market, right? Against these big algorithms and faceless institutions. But after watching this, you really have to wonder, if the most powerful and profitable action is often doing nothing at all, then maybe the real battle isn't with the chart. Maybe it's with the person staring back at the screen.